How have you as a company and how have your customers been navigating what's gone on with inflation so far this year after we did have, the inflation shock and then it comes off the boil, but still seems like there's been some persistent price elevation?
See, this year has been somewhat of a relief versus last year. In our recent earnings announcement, we talked about expecting our, inflation to be flat to -1%, so actual deflation for us. So it's been an easier year for us than last year for sure.
And in terms of how customers are responding, if you look at things like traffic, if you look at average ticket, we keep monitoring all the aggregate numbers for signs of consumer fatigue. Maybe there has been a bit of a slowdown in October. What are you seeing in your business?
Yeah, I think, in the restaurant industry, what we look for is check management first and then traffic counts. And for us, we've been fortunate that we've reported a couple of quarters of positive traffic in our dining rooms. And we have not seen signs of check management. Where we've seen a little bit of softness is in the off-premises occasion, the third-party delivery, for example, which is a much more expensive occasion for the consumer and a dynamic that really started during COVID and has continued. But for us, our core business of hosting and treating customers in our restaurants and them getting the full experience when they come in our restaurants, we haven't seen any slowdown there.
Yeah, you may be perhaps outperforming the broader group there. There has been a bit of a deceleration in terms of food and beverage spend. Totally, still positive, but somewhat below the rate of inflation in the latest month. What about your exposure to how much people are actually commuting? Is that part of your business? I know it's a kind of skewed toward the early part of the day. Is that something you have a read on?
It is. Our portfolio is pretty diverse. So we have urban locations, we have suburbs predominantly, and I think we benefited a little bit from the work from home aspect, and I also think we'll continue to, because I just don't see a return to work at the levels we saw pre-pandemic, and so we're set up really well with our geographic dispersion to benefit from that, and also our restaurants perform pretty similarly from a geography standpoint. So I think our coverage in 29 states and having more than 500 restaurants insulates us somewhat. We're not all urban focused, and so I think our real estate strategy over the year has put us in a great position going forward.
So that's interesting. Your take is that work from home is a net benefit for you because people obviously have the ability to sit down for a meal, whereas I know that things like quick service restaurants, if it's a drive-through business, it's all about how many people are driving past to go to work.
Yeah, exactly. And so we're seeing a lot of work from home folks in our restaurants. We're only open from 7 a.m. to 2:30 p.m., breakfast, brunch, and lunch. We're seeing a lot of folks come in our restaurants at what would have been a shoulder hour a couple of years ago at 10 a.m., but they get their day started. And we're still seeing an uptick in power breakfast, where people meet for breakfast for meetings versus what we've seen with lunch in the past. So it is a benefit for us, we believe.